Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Urmas Fatakia. A good day for the bulls. It's a bounce back that we're seeing after 7 consecutive days of fall. What is the last 1 hour looking like? We'll see. But for now, it's steady on the markets.
Eighth time lucky, if you could call it that, for the Nifty, and the broader markets are doing the same as well. Let's take a look at the top headlines at 1:30 this afternoon. Stocks are a wide swath of green, with advances far outnumbering the declines. Realty, consumer durables and autos are the big gainers, even as metals lag. Mid-caps are outperforming.
PG Electroplast zooms more than 9% after the company signs an agreement to become an EV manufacturing partner for Africa's Spiro Mobility.
Zee Entertainment surges over 8% after Puneet Goenka steps down from his post as managing director. However, he'll continue as the CEO of the company.
Vari Energies is under pressure after reporting muted Q2 numbers. Profit, which surged nearly 15% on a YOY basis, was aided by other income.
And Suzlon has climbed in a 5% upper circuit following an upgrade from Morgan Stanley. It has upgraded the stock to an overweight from an equal weight rating earlier and cut its price target, though, to 71 rupees a share.
Okay, it is a lot about the small caps and the mid caps today. It's a bounce back that we are seeing. All the sectoral indices, they are in the green. We talk about Nifty, it's up around 300 points. The small cap index is up around 2%. We do have gains coming in for the mid cap index as well. That one is up around 1.7%. So all across the board, there is a green looking screen. But again, it's been very volatile, Urma. So we do not know whether that would remain the case by the end of this trading session. But after 7 days of consecutive losses, there is some recovery on the way.
Something was in the offing, right? Something had to give after 7 days of fall, some support coming in. And signs were evident from yesterday's trading session itself, right? We recovered 100 points from the lows of the day. And now that we are heading into a midweek holiday tomorrow, courtesy of the voting in Maharashtra, there is some recovery on the screen. The Nifty and the Sensex both at the highest point of the day. The day, though, today belongs to PSU names. We'll get to that in just a bit. But to describe all the movers in the broader markets, Vamakshi is joining in this afternoon. Vamakshi.
Well, Hormas, it's green across the screen, and on that note, let me first start off with some of the top gainers on the broader indices. We have Zee Entertainment, Apar Industries, Jyoti CNC. Remember, the management joined us. Positive commentary out there. The stock is up nearly 9%. Triveni Turbine and Kirloskar Brothers are some of the other stocks that are surging in the trading session today. But on the flip side, we do have a couple of losers. Honasa Consumer made it to the list yesterday. It continues to trade nearly 10% lower. Thermax, Carborundum, as well as CE Info Systems or MapMy India are all down and out in the trading session today. But the list of movers is far greater. Let's also look at some of the insurance stocks because the FM has advised the banks to deter from selling insurance and instead focus on core banking, and resultantly all of these insurance stocks are down anywhere between 2 to 3%. There are some stocks that are gaining in the trading session today, and these gains are being driven by very strong volumes as well. We have Acom Drugs in focus up nearly 5%, Schneider Electric also up nearly 5.8%, Delivery as well as EID Parry are some of the other big movers. But apart from that, there are some stocks that are buzzing on the back of news flow. Suzlon Energy in focus, the stock is locked in the upper circuit since morning, and that is because Morgan Stanley has upgraded its rating on this counter, and PSP projects to surging nearly 11.37% higher, and that is because sources are suggesting that Adani Group is in talks to buy nearly 60% stake in the company. So those were some of the movers in the trading session today.
Okay, all right. Thank you so much, Vamakshi, for joining in. As always, it's a good time to welcome Shrikant Chauhan from Kotak Securities for a technical check. Shrikant, this bounce back that we are seeing, do you think it is something that will sustain? What are the next levels we are watching out for on the Nifty?
Yeah, good afternoon, Sonal. Good afternoon, everyone. I think, market is holding well above its important levels like 23,500, 23,300, where it has having support of option statistics as well as 200-day simple moving average. And when looking at the broad base activity in the market, I am of the view that this particular recovery looks like sustainable, and we can see the levels of maybe 24,000. Where the market is having next leg of resistance of 20-day simple moving average. So I'm of the view that in case if we see any correction during the day or maybe tomorrow, we should look for adding some position, because now this pullback to continue up to 24,000 on the minimum side, and in the best case scenario, we may even see the levels of 24,500. That's the overall view. Bank stocks recovered very well from the lows. Bank Nifty is also, IT index is also showing a good amount of strength. So if both these indices are going to support the market, I think we are going to see sizable pullback in the near term.
So in light of this pullback, what are the stocks that you're recommending, Srikanth?
See, PSU banks are doing really well, and when there was like a recovery in the market some few days back, we saw good amount of buying attraction in almost all the PSU banks, and now they are forming higher bottoms. So while looking at the entire setup of PSU banks, we are of the view that Bank of Baroda should do well, which is currently trading around 242, 243. From here, the stock can move to the levels of maybe 255 to 260, 65 in the near term. So broadly, I am of the view that it is heading for 265. We can keep a stop loss for creating any short long positions somewhere close to 234, 233. And the other stock which we like is National Aluminium. NALCO, it is doing really well. It is forming higher top, higher bottom, and volumes are also increasing whenever there is a break of swing high. So at current levels around 244, 245, it's a buy with a target of 260. And here also, if there is any long position, then we can keep a stop loss around 233.
Okay, all right. Thank you, Srikanth, for joining in today with all those technical bets. With that, we'll sip into a short break. Gaurav Jogani from JM Financial Institutional Securities will join us to discuss the latest trends from the footwear industry. Stay tuned.
Welcome back. Now let's shift focus to the consumer retail segment, particularly footwear, where the industry is seeing some major trends shaping up. And a latest report from JM Financial says that there has been an increase in demand for sports and athleisure footwear, a higher demand for premium products, and a lot of other trends that it foresees in the future. Now, to discuss more of this, we are joined by Gaurav Jogani, the Director of Consumer Discretionary at JM Financial. Gaurav, good afternoon. Thank you so much for joining in. You've highlighted 4 key trends in your report which are likely to shape up for the future. The one that I wanted to highlight, though, is the premiumization trend. What has caused this shift from mass market to premiumization, and do you feel that most of the incumbent players would have to make a shift to the premiumization bit in order to remain relevant and have their market share intact?
Yeah, hi. Good afternoon, everyone. Thank you for having me. The premiumization shift is on account of 2 counts. One, if we look at the past couple of years, there has been an increase in the GST rates for below 1,000 rupees segment, and which has increased from 5% to 12%. So there is a natural shift. There has also been an increase in demand for the sports and athleisure segment, which eventually lands up into the premium and the mid-premium kind of a segment. So that is also leading to that shift. Now what we believe is that to remain relevant, most of these guys have to offer consumers products which are more relevant to the sports and athleisure category, given that the formal segment is kind of steadily declining at a gradual pace. So that is the reason why we feel that the higher the premium segment for a particular company, the better it is. And in addition to that, if they are more casual and athleisure products, still better than that.
Okay. Gaurav, so this is what's happening with the premiumization bit. I just want to understand how big is the organized market currently? What kind of growth trends are we looking at in the organized market itself? Because you did say that the change in GST rates did lead to some demand shifts as well, right? So what rate are we looking at this particular segment growing?
So the overall, if we look at the organized segment for the footwear, it would be around 35 to 36% odd. The organized segment is expected to grow at around 12 to 14%, anywhere in between that. Whereas the overall footwear segment, we expect to grow at around 7 to 8%. And this will largely be driven by prices and not by volumes.
Gaurav, you have mentioned that you are expecting the footwear segment to grow at a 12% CAGR, the organized footwear to grow at a 15% CAGR. Can you share some of the tailwinds that you have highlighted that would lead to this kind of growth going forward?
The tailwinds being one, if you look at today's India per capita consumption, it's just only 2 pairs per consumer. We expect this to steadily increase to maybe 2.5%, 3% going ahead. And this would be driven by increase in the per capita consumption by the increasing in income. Second thing would be also, see nowadays people prefer for multiple footwears. They have a separate footwear when they go out, they have a separate footwear for the sports thing, they have a separate footwear for their in-home consumption as well. So the two things that will largely drive this growth will be one, the higher per capita consumption and the higher increase in the incomes from all of these guys.
So these are some of the tailwinds. Are there some risks? Because there was a point in time when the entire industry was facing a lot of pressure. Whenever we had conversations with the management, they said there are still certain things which need to be addressed. So what are those risks to the growth forecast that you have?
So the risk, I would say, one is, the timing difference. So, for example, if we recap to the last year, most of them, kind of have reported muted growth rates. And one of the reason was the year before that, wherein there was COVID tailwinds. People came out of COVID. So the demand was kind of preponed. So that was one factor. The other bit is if your product doesn't remain relevant. So, for example, if there is a higher demand for sports and athleisure segment, however, your product portfolio is more accustomed to, the formal kind of a footwear or maybe more semi-casual kind of a footwear, I think that could be another risk. Third is, I think, the recent risk with the BIS implementation. So, government has implemented BIS from the 31st of August 2024. Now, this BIS implementation would, entail that there would be no imports outside of India from those vendors who are not BIS registered. So in that case, if they are not able to make alternative arrangements or they are not able to get, the sourcing right, that could, in the interim impact the growth rates in the near term.
Gaurav, we have initiated coverage on 3 of these footwear players, Campus Activewear, Metro Brands and Bata. But I wanted to talk to you particularly about Bata because you have a neutral stance on the stock.
Yeah.
And since you spoke of premiumization, Bata has been the one that has been moving towards this premiumization trend from what it has been traditionally known as a mass market player. But the stock has just flattered to deceive. It's been an underperformer for a prolonged period of time. What would it take for Bata now to finally start delivering in terms of share price returns?
So see, one is the top line growth. That is very imperative. So if you look at the last 3 to 4 year CAGR, that has been only 2% top line CAGR for them. One of the bigger impacts for them has been the decline in the sub 1,000 rupee segment. So as you talked about premiumization, the 1,000 plus rupee segment has grown for them even in this quarter at around 7% plus, whereas the sub 1,000 rupee segment has declined by 25%. So unless and until they are able to drive growth in that sub 1,000 rupee price point segment, which constitutes around 30% of the overall sales volume for them, the growth could be anemic. And because it's a high leverage model, unless and until that top line comes in, the profitability would also remain impacted. So I think bottom line would be they need to drive top line growth, and the top line growth will be a function of how they drive growth in the mass segment.
Okay, so mass segment continues to be the focus point, right? Because right now better growth is seen in premiumization. What makes you like Metro Brands and Campus in this case? What are some of the triggers that you think will lead to the upside that you have been penciling in?
So see, Metro Brands, I'll specifically talk about. One thing that they are doing right is, one, they are brand agnostic. They have this unique EBO channel wherein they not only sell their own brands, but they also sell third-party brands. Now, what this allows them to do is that they are able to sell those products which are in higher consumer demands. For example, during COVID times, we saw a higher demand for the sports kind of a footwear, and they were, able to sell those kind of footwear through their stores. The other bit is they are also now tied up with a few good brands like Fila, which is again on the sports and the athleisure side. And very recently, they have also started to open Foot Locker stores, which will give access to the consumers to the premium sneaker kind of a brands, which they were, otherwise not able to have access to. And in addition to that, they are also being robust on addition of stores. So they are practically adding 100 to 125 stores each year. So a combination of all these things again is, driving growth for Metro. And we believe that, that could drive around a 15-16% kind of a top line growth for them and a higher profitability growth given the operating leverage benefits. Now coming to Campus, the past 1 year has been impacted for them because they have gone for this realignment of the distribution channel wherein They are getting the distribution act right, as well as they are now focusing on the open footwear segment, which they were not focusing earlier. They have also now introducing more more value price points, which will help the consumer, to interact with their brand and draw more footwear per person from their brand itself. So a combination of all these things is helping Campus.
All right, Gaurav, thank you so much for sparing time and joining us this afternoon to take us through your views on the footwear market. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Welcome back, and PG Electroplast is our mid-cap spotlight of the day. The stock has hit a new high as its arm, PG Technoplast, has announced a foray into EV manufacturing. Upasna has more details on this. Upasna.
Well, the company is in focus today. As we can see, the stock is clearly buzzing high towards the highest point of the day. Well, the company says that the company's wholly owned subsidiary, that is PG Technoplast, forays into electrical vehicle and lithium-ion battery assembly. Well, the company signed a definitive agreement with Spiro Mobility to become exclusive manufacturing partner for manufacturing of EVs of Spiro Mobility in India. Now, PG Technoplast will be setting up manufacturing facility for electric vehicle and lithium batteries and other related components, while Spiro Mobility shall be responsible for research, development, marketing, sale and distribution of the EV product, is what the company has highlighted. Mind you, Spiro Mobility has the highest fleet of electric motorcycles on roads in Africa, is what we know from the press release. So all in all, it's a much positive news for the company, and we can clearly see the stock buzzing in trade today on the back of this foray.
9.5% higher is PG Electroplast. Upasna, thanks a lot for that update. But as I mentioned at the start of the show, the day belongs clearly to PSU names, and after a very, very long time, and after a fall of almost 35 to 50% from their peak, some of the PSU stocks are finally seeing a rebound. Pull up IRFC, and that will come up on your screen. That was the top gainer on the PSU index. Remember, IRFC starts trading in the futures market as well later this month. 5% higher for IRFC. Cochin Shipyard 2, which has halved from its peak now, is also up another 5% in today's session. We'll tell you more about these PSU stocks on closing bell. But the other important update, though, is that the NTPC Green Energy IPO, the retail portion of that, is fully subscribed. The IPO is open for subscription today at 24% overall subscription so far. 102 to 108 rupees is the price band. And lastly, pull up Akam's Drugs as well. That stock is now in an upper circuit of 5%, and that comes after a 10-day losing streak when it has lost almost 35% during these 10 days. So now the stock is finally in a 5% upper circuit as we speak. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.